Hello, everybody. I just screen shared the wrong window. Whoopsies. But hello, everybody. Today is Sunday, January 28th, and today, Block Digest episode 75 is coming at you at block height 506,533. And today we have the pleasure of introducing special guest, Giacomo Zucco. Welcome to Block Digest.
Thank you very much for inviting me. Honored.
And we've got our regular cast of Meme Master Rick.
Hey everyone, I hope you all are having a good weekend.
Kylo Ren. I'm sorry, I mean JW.
Hey guys, let's enjoy talking security today.
And Janine.
Hi.
All right, so I guess I'm gonna pass the torch off to JW and Giacomo. You guys kind of wanted to dive a lot more in depth into the security model of sidechains and potential flaws or attacks from that vector. You want to take it away, JW?
Yeah. Thanks a ton, Giacomo, for coming on. So the thing that kind of inspired this is we were going back and forth with a couple of the teams that are trying to push sidechains, specific sidechain solutions on Twitter, and it ended up being a pretty interesting conversation. And I thought maybe we could start out, Giacomo, by just if you could talk about the potential of sidechains and kind of why it's exciting and why we want it to be done securely, and then we can kind of go from there and start talking about some of the problems. Sure.
Yeah. The reason itself, I've got so much passionate about this debate on Twitter with everybody kind of ending up insulting each other as always, is that I think that sidechain as a concept is extremely important, extremely useful, probably one of the keys for the long-term success for Bitcoin, because the real problem right now is that altcoin as a model, let's just forget for a moment that right now, with few exceptions, maybe one, maybe two, all altcoins are just scams, really technically speaking and socially speaking and economically speaking. But even if there was one altcoin that was scientifically legit, engineeristically speaking, well done, and ethically speaking, well promoted, the concept itself of an altcoin to experiment undermines the concept of scarcity of 21 millions of coin. So even if we imagine a world in which everybody is serious about producing new coins, the fact is that if you can create infinite variants and clones of Bitcoin, and you continue innovating that way, then the premise of a determinate scarcity on Bitcoin, which was the initial premise that everything, the theory of hyper-Bitcoinization is based upon, just collapsed. So we can just say that we will just go on without altcoins. Everything will have to be done on Bitcoin or nothing. That's for sure is one possibility. But the problem with this is that this undermines the possibility to experiment with designs which are interesting but so different, so radically different from Bitcoin, that there is no way to try to implement those in Bitcoin. For one example, right now we are just seeing debate about how to launch it will be green. So the first implementation of Immutable. Immutable is a great idea, but unfortunately is so different from Bitcoin that you cannot trivially propose it like just a BIP. Or one could say that Monero itself is right now it's like probably the only altcoin that serves a purpose actually in the market, and it does with ring signatures and confidential transactions that are things that are not scalable on RAN, so you cannot adopt them on Bitcoin, but still people need those for some strong anonymity purposes, and so you are left with an altcoins. Or even more, you could create an altcoin for experiment like Peter Todd's tree chain or proof chain or client-side validation, or you could do that even to quick trade-offs. For example, Satoshi had to choose a trade-off between very, very slow block time and very, very small block size, and then you have a chain that you can validate easy on a cell phone, but with very, very bad user experience. Or you could do something with very, very large blocks and very, very high frequency blocks, but then you get something very easy to use, very good UX, but then nobody can validate and you get centralized in a minute. So Satoshi had to guess how to put Bitcoin inside of this trade-off line. It chose 10 minutes and 1 megabyte. Now it's 10 minutes and more than 2 megabytes because we have SegWit. And probably this was a choice a little bit moved too much toward UX instead of security, because as you know, we don't run a lot of full nodes, and users are using non-full nodes in their cell phones, basically trusting miners about inflation schedule, about not stealing Satoshi's money. So a lot of people is trusting miners. So we could say that this is not the perfect choice, but to find the perfect choice, it would be nice to have the ability to experiment. Of course, you can use testnet, but as we have seen with SegWit adopted on Litecoin, for example, a live testnet with real money on stake is usually more effective, especially to simulate a threat model. If you have real model, if you have real money, you can actually see real attacks and real social dynamics. If you don't have real money, probably you're not really testing an economical system. You're just testing the code, which is important, but it's not enough. So sidechain as a concept is great, and that's why I've got particularly triggered by the fact that one of the main proponent left, at least in the short term, for the sidechain concept. So sidechain at the beginning were proposed by, basically Blockstream itself was created around the idea of sidechain and around the paper of sidechain, with the first idea that we will maybe discuss in this episode, the idea of SPV proofs. Then all the people proposing that felt that SPV proof was not secure, so they are like pushing toward another direction, which is federated and maybe long run zero knowledge proof based. But this moves a lot. This probably lowers the bar for trustlessness and permissionlessness, and this moves a little bit far away the time frame of sidechains. One of the few proponents remained for sidechains right now, which is Paul Stork. I'm sad to see that he decided to promote his idea, writing conspiracy theory about Bitcoin developers and trying to use the anti-Bitcoin side like a boost on his proposal. And I think that's very bad, especially about timing, because sorry, I'm talking too much. Then I will shut up in a minute.
No, it's all right, man. I'll just interject really quickly that I completely agree with everything that you said about the potential, and I think Grin is a perfect example of something that's super disappointing that it's not on a side chain, because we don't have a secure way to do that yet. Because what they're doing, like you said, is really interesting. It's innovative. There's new sort of math involved, right? Like it's fundamentally very, very cool and very interesting. But in order to do that experiment, they had to run a bunch of other experiments related to the economic supply. So for example, there's more Grin produced over the lifetime of Grin by far than there is for Bitcoin, because it doesn't have a decreasing sort of or logarithmic emission schedule, right? It's just linear. So it's 50 per block forever. And, you know, maybe that's good, maybe that's bad, but it's unfortunate that we can't just use Bitcoin with a proven sort of monetary distribution. And the other big thing that you mentioned that I think is really huge for sidechains is that not only do we want to be able to just experiment still using Bitcoin, which is really important, but we also really want to be able to experiment with the existing asset. Sorry, I kind of lost my train of thought there, but we want to be able to experiment with the existing asset. We want to be able to try new technologies, and we don't want to have to experiment on all the economic side of things. Oh, that's what I was going to say. And, you know, Bitcoin is essentially an attempt to create global money, right? We need everybody to be using it for our goods and services to be priced in this thing, right? For it to really, truly be money, because that's one of the attributes of money is being a unit of account. And in order for us as Bitcoiners to have a plausible story to people that understand economics, we have to be able to tell them, yes, this is going to become global money. Otherwise, it's not all that interesting. Certainly not interesting from an investment standpoint. And in order for it to become global money, we have to be able to innovate on it without changing the actual unit of account. So for all those reasons, I'm totally with you. I think if we can find a way to do secure side chains, it's going to be amazing. And the fight that we got into, on Twitter with Paul, and this applies to RSK just as well, although they've just been a little bit more quiet about it, is that, yeah, we want to do all those things, but we're not going to force it and do something that's insecure in order to kind of get what we want, right? That's why we didn't want to just increase the block size to a dangerous level. We don't want to break the system in order to add features.
Yeah, I agree, and this is symmetric for with the other kind of debate. So I said, and you said as well, that if you want to experiment with new technical architectures, you don't want to also bootstrap again a new asset class. So we already have the digital gold. If you want to try to use a new architecture, so Mimble, Wimble, whatever, you want to keep the asset, the new digital asset that we that people before us and we bootstrapped for years. And then you want to use that to innovate on top of you want to use that as money on top of your architecture. But on the other side, if you want to experiment with new kind of economical assets, for example, you want to try, I mean, economy is not only made by gold. Economy is made by gold, but also by debt, stock, futures, derivatives, and if you want to try to do those on a permissionless digital ledger, maybe you don't want to reinvent the underlying structure. So along the side chains, to use Bitcoin without the Bitcoin blockchain, there were also experiments to use the Bitcoin blockchain without Bitcoin the asset. For example, Counterparty, Omni, Colored Coin, and even there we have seen the same problem. Which is impatience. So people had this idea to try. The way to do that in a clean way is not around yet. And so since they cannot be patient, I mean, Peter Todd waited for years in order to just see check log time verify, a check log sequence merge, which were very straightforward things, very easy things. And we had to wait for years. SegWit was a battle. It was years of study, proposals, testing, an idea by Luke about soft fork, and a lot of controversy. So for something as important as sidechain concept or not Bitcoin asset on top of Bitcoin, it's normal that we will take a lot of time to make it good. And unfortunately, that happened as well with Counterparty and with Mastercoin. People that cannot see their idea adopted soon because it's still not good, it's still not safe, what they tend to do is to convert their passion into some kind of conspiracy theory where everybody else is somehow boycotting their idea but I want to disprove exactly this point. So when the problem is not.
Well, hey, let me ask you this, just because I don't know everybody that we basically said what they're trying to do is a bad idea. I don't know if everybody even understands that. So let's cover why it's a bad idea, and then we'll talk about motivation, because I think you're more charitable on the motivation side than I am. Yeah. I tend to think that this is a little more malicious. But what is the problem with what Paul Stork is proposing and what RSK is saying that they're moving to?
So the problem is somehow the same problem that stopped the Blockstream team from going on with the original idea of sidechain. So the original idea is you lock your funds inside a Bitcoin address, then you generate Bitcoin on the sidechain, and that's the easy part. But when you have to unlock the funds on the main chain, locking or destroying the funds on the sidechain, then of course the Bitcoin nodes cannot be supposed to validate all the story of the asset on the sidechain, because otherwise there's no purpose in having a sidechain in the first place. So you have to assume that Bitcoin full nodes will not have the burden to check all the history of the side coin. So the original idea is we will have an opcode that just checks that even if the Bitcoin full node cannot validate all the story of the asset, they will validate an SPV version of it. So a simplified Merkle tree-based version, which is possible to produce in a forged, false way, fake way by the miners. But the idea back then was probably the miner will not attack. Then after a while, we have seen miners actually starting to use any kind of not actually miners. We have seen what? We have seen one ASICs production monopolist, so Bitmain basically, getting great part of the ASIC market and actually using this influence to impose to mining pools, to hashers, to signal political stances that were favorable for their games. They did it on Litecoin, they did it on Bitcoin. Basically, they used the BIP9 mechanism, which was a readiness signaling mechanism. So BIP9 was, we agreed about this change. Everybody agreed technically. So on GitHub, it's all hack. Now that we agreed, please miner, do signal that you are ready to adopt the new rules, but that's just a signal, not a voting. Miners, guided by the ASICs monopolist, started to use this signaling mechanism as a voting mechanism, and other malicious people, so the B2X guys, Barry Silbert and Jeff Garzik, they use this kind of situation to push their compromise, so basically their corporate attack on Bitcoin, because of this BIP9. So the idea of BIP9 itself was pretty much inoffensive. It was a naive, good mean idea. Please just signal that you're ready. But it was used as a political weapon by a mining situation which could get better in the future. But right now, it's very, very easy to control by a single party in China. Maybe not next year, but right now that's like that. So people stopped with the SPV idea. And what Paul proposed basically is get rid of this SPV proof. Let's make miners directly decide what history on the sidechain is good and what is not good. So 51% of the miner will have the ability to unlock the funds toward any address they like. So some kind of game theory developed by Paul that I think is actually interesting will prove that the incentives for honest miner will not be to just take the money and run away, but will be to somehow coordinate as a shelling point around the sidechain real history. The point is that this is an assumption that I think could be right or wrong, but we have at least one example of this kind of mechanism, BIP 009, used exactly to force political agenda, external political agendas on top of Bitcoin. So the problem with this drive chain idea, which is the miner vote because of the miner vote to decide the destiny of the main coins, this kind of idea opens up a new potential political target for one specific miner monopolist to try to blackmail basically all the sidechain economy in order to obtain more influence on the main chain economy. Something like, I don't know, I don't want Schnorr signature to pass because Corey is evil and Blockstream, blah, blah, blah. And so if you try to force Schnorr signatures, we will divert or destroy the funds on this sidechain, which is the one used by these users. The problem with sidechain is that many people in the ecosystem, now that they thought about it, they don't want to open this kind of attack surface. It's not that this logic cannot work anyhow in every situation, but right now, after these political precedences, this new surface attack surface is probably not what we want, at least until we fixed the mining problem in a more general way.
Yeah. So if you use like security terminology, or you look at security issues in the security community, we usually say like the least interesting attack is a denial of service, right? So like jwweatherman.com right now, if you go to it, you probably can't get to it because I'm undergoing a denial of service attack because of, I don't know, I said something the last week that pissed somebody off, right? So they're throwing a few $100, probably not a whole lot more than that, to keep my website from functioning, right? And I got to do some configuration stuff. That's the least interesting sort of attack, right? From a security perspective. The most interesting attack is called an elevation of privilege attack. And that's where you either have no rights to do something and you get some rights, like you go from a non-user to a user, or you go from a user to an administrator, right? So those are the things that we like the best as security researchers, right? That's the money shot, right? What insecure sidechains, right? Drive chain and what RSK is planning on doing. What they do is they essentially turn And it's not an exact one-to-one, right? Because you can steal some money through double spends, but it's pretty limited if you do a 51% attack. But what implementing insecure sidechains does is it takes it from, you know what, you can censor transactions, you can prevent people from moving money. It's essentially a denial of service with maybe a little bit of fund stealing on a limited basis. And if you have, say, $500 million in a sidechain, now that same attack becomes like the best elevation of privilege attack that you could hope for on Bitcoin, because you can just take all of those funds. And that's about the stupidest thing that you could conceive of doing. And we can talk about the arguments that Paul has as to why this is not a bad thing. I think we should, because I think that underlies why it is such a bad thing. Right? His responses are far more disturbing than just the implications on the surface, and that's why I tend to think that there's more maliciousness to this than ignorance. But yeah, that's essentially it. Right now, a miner can prevent transactions from happening. If we do insecure sidechains, a miner can take all of the money that's in the sidechain. That's a really bad idea.
Yeah, and also really quick, I wanted to interject. Like, I also think there's problems where the incentives can actually affect the main network in a way that I see a lot of proponents for sidechains denying. Like, for instance, in a merge mine sidechain in the original proposal, not looking at Paul's blind merge mine proposal, if fee revenue moves into that sidechain and it's got a higher validation cost, you're raising the costs for miners to actually, safely collect those fees, because they actually have to validate everything they're including in a block to know that they're actually going to get that fee revenue. And so you kind of bring up that cost marginally for miners. And the thing that bothers me with Paul is when you look at the blind merge mining proposal, is the entire rationale behind it is that a non-mining node can effectively create a block candidate and then give the vast majority of those fees to a miner to include it and still keep a little bit in profit themselves. And see, what I don't like about that is, for the right now, the short term, that kind of band-aids that problem of increasing the cost of mining. But when you project out to the long term and look at the fact that mining is going to trend to razor-thin margins, and when you project out long term like that, if you look at the blind merge mine model with the profit for the non-mining nodes still existing there, that still implies that there is room to profit for the miner when those margins get really thin, just by doing it themselves. And so from what I can see, unless I'm missing something, this pretty much just delays that centralization effect that it has on miners. And it delays it until pretty much the worst possible time that you could have that centralization factor kicking in the far future, when by that time, I assume Bitcoin is a very valuable global asset and it's razor thin margins. And that would be the worst time for just a delayed centralization exacerbation to kick in for miners.
Yeah, I kind of make a distinction between what I'm calling insecure sidechains and secure sidechains. And secure maybe is questionable, right? So there is some interesting problems some potential problems with mining, with just the concept of sidechains as a whole. Like, if you can't steal the funds and they function, maybe they screw with the incentives for miners. I think that's one category that's really interesting. But what Paul is doing, I would say, is and what RSK is doing is in the other category, and that's the category of sidechains that they can just have the funds drained. And as somebody that's been in security for a long time, software security, I can tell you that if something can be hacked, it will be hacked, and this can be hacked. So from my perspective, the long-term implications for mining is not really super important for insecure sidechains, because it's not going to be around very long, right? It's going to fill up until it is worth draining the funds, and then somebody's going to drain the funds. So anyway,
yeah, so I think
interesting conversation, but there's kind of two different categories.
Yeah, I agree. I think that it was very important to underline that there are two separate debates going on about Paul Stork proposal of drive chain, because he proposed two BIPs. One is blind merge mining, and the other one is the drive chain two-way peg. So we focused at the beginning of this conversation about the first. You are right that there is also the second, and there is controversy also about the second because of the reason you just explained. I think Peter Todd was the main, the more vocal exponent of this kind of concern. I personally, I'm not so much interested in this second debate, because it's true that in a way it could directly affect the main chain because of these long-term effects. But I also think that this is easily ditched, because this is in my opinion, the least important part of the drive chain concept. So if you create of the side chain concept, if you want to create a side chain, you need a two-way peg mechanism, but you don't strictly need to leverage existing mining infrastructure. I would say that for most alternative architecture idea, maybe you want to do a DAG, like Tangle-like sidechain, or you want to, or basically you want to use a sidechain because you want to change the proof of work model because this is not working anymore, for centralization or for other concerns. For example, my concern with actual Bitcoin mining, I'm running some mining operation in Bulgaria, and what scares me is that for Bitcoin mining, there is no plausible deniability, which is very bad. If you run an altcoin mine, then if somebody comes to see what you are doing, you can say that you are doing rendering or stuff. If you run an ASIC mine, then you are just mining Bitcoin. There is no plausible deniability, which is bad for miner anonymity. So in a way, I'm not so interested in helping the debate about merge mining, because yeah, it has bad effects, but many side chains could just avoid totally to use it, and they could just rebootstrap another kind of mining solution. I think that the drive chain point is what I'm passionate about, because even if drive chain is not secure, we will really use a secure way to do that. And so that's a more interesting debate, in my opinion.
Yeah. If we do roll out something that's insecure, that's not going to advance the science of trying to build a secure sidechain. It's going to delay it. So let me tell you guys kind of why I'm convinced that it's insecure. To rely on 51% of the miners not to drain all of the funds. One reason is that we've seen vulnerabilities where miners are backdoored, right? So Bitmain, Antbleed was a situation where everybody realized one day, oh my gosh, if Bitmain wants to, they can control my miners, they can have complete control of it, and they could potentially take all the Bitcoins that I mine and send them to them. Now, that's a really terrible security issue, but it's not that bad, right? I mean, worst case scenario, you're a miner, you've got some hardware, it gets taken over by somebody that's backdoored it. You realize you're not making money, hopefully after hours, hopefully not after, days or weeks, right? Because you're probably watching performance if you've got a big investment. And you go in there and you shut them off and you figure out what's going on, you update the firmware, you do what you got to do, right? It could be very, very bad, right? But and everybody freaked out, right? We were all very concerned about it at the time, but that's the kind of the worst that could happen in that case. Now, if there was $500 million, or you have multiple side chains built on the same thing, and we have a few $1 billion floating around, then an attacker that has access to own everybody's miners for a short period of time, they're able to steal all of that money. And what that means is that now you have maybe $1 billion in budget to go around and compromise as many of the miners as you can. If you're the manufacturer, that's obviously a lot of incentive, and that's what happened with Antbleed. But if you have a $1 billion bounty, that's going to attract some very intelligent and crafty security professionals, and maybe even state actors, right? So we don't want to create a ton of incentives to destroy our own network. So this is not an opt-in, right? Like the argument against that is, hey, let the market figure it out. This is just an opt-in situation. If you don't want your money at risk, don't put your money at risk. I won't put my money in a 51% vulnerable sidechain, but that doesn't mean that that Bitcoin can't be compromised. And it doesn't mean that the price of Bitcoin wouldn't be damaged, because when an exchange is hacked, people have a really hard time understanding that that wasn't a Bitcoin hack, right? We saw a ton of damage to the Bitcoin brand and adoption after Mt. Gox. And slowly people have somewhat realized, or at least maybe there's been enough time that I would say the average person still thinks Bitcoin was stolen, that there was a vulnerability in it, and whatever. But now try explaining to somebody that no, it was a layer 2 thing. It's fine. It's not really Bitcoin. Oh, but it's not Lightning. Don't worry. Lightning is fine, right? Lightning we absolutely need, and that's a layer 2 thing, but that's a secure layer 2 thing. So it's Bitcoin, but it's a layer 2 thing, which is critical to Bitcoin, but I shouldn't worry about it even though it got hacked. That's a very hard message to communicate. And I think we would see a big impact on Bitcoin price if that happened. And so that creates another big pile of money and a big incentive to hack these things as well. Because if I can short Bitcoin and then execute this attack, maybe there's another couple $2 billion. And the last thing that we want is $5 billion on our heads, right? That's not a good situation to be in. And so that's why I'm very questionable if you could give these guys the benefit of the doubt, given the stubbornness to try to get this thing implemented. Because it's, from a security standpoint, I think it's very, very obviously a catastrophe.
Well,
oh, sorry. Yeah, I'll go.
Oh, I was just going to mention, that I think it's, all this is necessary, like you're saying, to experiment and try to find, these new routes to do things that we need to grow the network. But, I think this is all like we're saying, like theory as far as how this is going to play out and everything. And, I still wonder how this Lightning network's going to scale, and if we see Mimblewimble kind of come out independently and how that could work, standing side by side, and if people, how exactly is it going to play out? I think that's where it's we're kind of digging into this, and I'm wondering just how does Paul get a movement behind him unless he stirs up some sort of hornet's nest? And it's just this is where I've kind of been going back and forth with all these attacks. It's these guys are just trying to get momentum, and the space is small enough to where the only real way that maybe they see it is to just sort of bring out a bat and see if people start coming to their side. And, it's just making me wonder, we haven't seen this model come out correctly yet. And, that's just the standard. Everybody right now, whenever they want to grab a movement, they just pull out a bat and sort of see if people come to their side. And it just, that's where it's I don't want to say he's malicious. He's just kind of at a loss for a place to go to try and get support. But, I don't know, like I'm saying, this is all theory.
Okay, so Giacomo, yeah. What does Paul say, right? What do the guys that are proposing this say when you tell them, hey, look, we don't think it's a good idea that 51% of the miners could steal all the funds? That sounds like a much less firm security footing than we're on now, and we really think that that's not a good idea. We should wait and find a secure way to do it. What's their response, and how do they justify this thing?
The first response is the one you already mentioned and already debunked, which is it's just opt-in, so it doesn't affect the money of people not putting money there, which is also, you already proved that argument basically wrong. Some counter argument could be that, I could say, yeah, but that's true even for Bitfinex, or so you just cannot do an exchange, otherwise that's an attack on Bitcoin. Or that's true for Liquid, because if Liquid guys of Blockstream steal all the money, then they are attacking the main chain, the same model. Actually, this is a good counter argument, but it does obscure three main things. The first thing is that miners, unlike federates of the sidechain or proprietary of an exchange, miners are actually perceived to be part of the security model of Bitcoin. So as you said, to make the difference between Bitcoin and an exchange, or between Bitcoin and a bunch of federates, it's already pretty much difficult. To make the difference between Bitcoin and a merge mine drive chain would be borderline impossible. So it's very difficult to keep people protected from this kind of danger if they think that the security model is the same of Bitcoin, which is not. So it's a problem of deception of the market, which is the same reason why an honest altcoin, supposing you can have an honest altcoin, would be better than Bcash pretending to be Bitcoin. So if you do an altcoin, fine, but if you are using the Bitcoin name, trying to say that you are Bitcoin, that's bad, and that creates more confusion. And a drive chain could actually have this kind of impact, which is different from an exchange or a federated chain. And also the second problem is that you are not just trusting the good behavior of a new set of actors, but of a set of actors that already have a stake on chain, on the main chain. They are playing power games already on the main chain, and we have precedents of them trying directly. So it's not an hypothetical attack. These same people that will have the 51% power to steal the money is the same people that already tried just a few months ago an actual attack on the main chain. The third argument that you actually raised up in our previous conversation is that federates of a federated sidechain or exchange owners are kind of nominally known. They are kind of known people with some kind of reputational or even legal responsibility and liability for what they do. So if
did we lose?
They can do that, but it's an exit scam with all the consequences of an exit scam. While if miners do that, miners are I mean, fortunately, pretty much anonymous, or they.
Shoot.
I think I've lost you.
Paul's DDoSing you. He doesn't like you speaking the truth.
Yeah, it wouldn't surprise me. Maybe kill your video and try to say that one more time.
Okay, I try to. Is it better now?
You actually sound fine. It goes dark every once in a while, but you know what? Just try again as it is.
Okay, I try again.
It's just the bandwidth cut out on us.
Okay, so basically the third reason was that the miners are, and it will be better if miners were anonymous, and that will actually help this kind of exit scam without actually being an exit. They could take the money without exiting. So it's not like Bitfinex or a federation. Is potentially, hopefully, anonymous people enabled to do this attack. So the second argument that they are answering to critics is even more crazy, and it's a conspiracy because Core is just a cult, and they are just helping the ideas of their friend, and they are rejecting the ideas of outsider. This is so ridiculous because I would just like to point out that Mimblewimble was not proposed by a core developer using his authority and using his web of trust in order to be audited. Mimblewimble was proposed by an anonymous guy that launched a random TXT on a chat and then disappeared without having a name, a reputation. So it's not true that the community is close to contribution that comes from outside the community. That's proven false by the Mimblewimble story. The problem is that if you put your contribution and you fit it inside a reputational attack against all the Bitcoin community, well, that's probably, I mean, it's true that ideas have to work on their own legs without helps. But there is, I mean, Bitcoin is a social construction. It doesn't depend on any single individual, but it does depend on a lot of social interactions. So you cannot try to attack the Bitcoin development community and hope that this will help somehow the development of your idea. If anything, this turn that Paul took will, I'm sure, it will basically postpone any experimentation or any evolution on the idea of dry chain for months, and there's nothing wrong with that, because it's just if you use a malicious look in order to propose your idea, you will be considered probably malicious, and then people will prioritize other safer or well discussed ideas.
Yeah, totally. No, that makes sense. So then the other thing that that really shocked me about the conversation, and this was when, in my mind, the bit flipped from maybe ignorant, maybe I'm missing something, to these guys are bad guys and they're malicious and they're trying to do harm. And it was when you say, okay, well, what if somebody does do a 51% attack? Because all the incentives seem to be aligned. You know, how do you deal with that, like from a technology standpoint, right? Why do you think it's not going to happen, right? And what are you going to do about it? And the answer is, well, don't worry. We can just do an Ethereum style hard fork, right? We can just rewrite history on the Bitcoin blockchain. And because we're willing to do that, you know, we're not going to let $500 million be stolen. Because we're willing to do that, then the miners will not be incentivized to even attempt it in the first place, right? And ultimately, that's what the security relies on, is if somebody steals this big bucket of money that's very available for theft, they won't be able to get very far because we'll just reverse the transaction.
Yeah, and that's ridiculous. I mean, like, if we look at the UASF, it worked, but at what cost? With what extra damage and like delays and complications? And that's still something incredibly early on in Bitcoin's history. Like, imagine this with 500 million people and more than $1 trillion at stake in the whole network. Like, it's not going to happen. It just won't work.
And for me personally, if that happens, that proves that Bitcoin's not reliable. Because for me, what makes Bitcoin interesting is the idea that it's immutable, is the word that we use. But to me, it's just secure, right? If I do a transaction, that transaction won't be reversed. Even if it's not popular, even if it pisses people off, even if there's a big, you know, political campaign against me, that money is my money, and you can't take it even if I'm not popular, right? That's what makes Bitcoin valuable. And so if it's true that we could just overwrite it, then it's not interesting. And obviously that's not true, right? I mean, Ethereum couldn't even do that. And it's full of people that have very little interest in trying to create secure money. So the idea that that's a solution tells me that that we've left honest inquiry and we've moved on to just full on lying.
Yeah, or yeah, lying or being very, very, very naive for I don't know. Okay, I will not try to to inquire further the motivation. Anyway, I agree. Even if you respond that actually that will not be a charge back, but just a blacklisting. So I will stop the withdrawal from happening before it happens. So it's not a chargeback, but still you are basically assuming that on Bitcoin we will have easy coordination in order to blacklist people. So your argument is valid even if you don't assume an ex post action. Basically, Bitcoin is strong because it's not trivial to coordinate an attack in order to change Bitcoin's rules. If you assume that it gets not only trivial, but even cyclically trivial. So, I mean, UASF was a big, big gamble. It could have resulted in a split of the chain. At the end, I just went along it as anybody else, but it was a serious gamble and probably not worth it for having Segwit before. But that was thought like una tantum, like just one-off. We do this because this is a special moment. But if you can do that routinely, basically you are assuming that Bitcoin is easy to change whenever there is something happening routinely, which is just, yeah, assuming Bitcoin doesn't make any sense anymore.
Yeah, absolutely. And, you know, if UASF was over something like increasing the 21 million cap or stealing people's funds, I think there's no question that it would have failed. And it would have resulted in, you know, something like we have with Bcash, right? Maybe even less interesting because it would have been harder to sell those kind of security issues or compromises to existing investors. So I'm still very confident that that's not going to happen with Bitcoin because, you know, existing investors really don't want to be made poorer. And even if you can deceive us about a lot of things, it's pretty hard to deceive us that if you increase the number of transactions or if you create a system where I can't depend on the transactions, even if I'm not popular, that it's going to be good for me. And I hope that's the case. But if it ever doesn't become the case, I will be following that whatever chain is the secure chain, right? Even if it's the miner chain, even if it's the chain that has a smaller market cap or smaller value, because I believe in the long run that a secure money is going to have the best chance of becoming money. So the whole idea of just cutting that concept, cutting the throat of that concept, just is absurd. And not doing it because we've had some catastrophic situation, right? Doing it, going into it and treating that as if it's a security feature, right? That's just too much for me to believe could be ignorance for anybody that's been in the space for more than 6 months. And I mean, the other players that are involved here are RSK, and you look at somebody like Sergio. He was a security researcher before he got into Bitcoin, so he knows very intimately the difference between an elevation of privilege and a DOS attack, and he knows that this is not something that like the broader security research community would say, oh yeah, that's not a really bad idea. So I haven't talked with him, right? Maybe he has a different perspective, or maybe he'll be able to clarify at some point. But but I'm not naive enough in my view to believe that this could be accidental.
Yeah, a little caveat is that right now Rootstock is actually a federation, so it's similar to Liquid without the secure hardware. But the problem is that they announced they want to move to a drive chain / merge mining setup. So for now, Rootstock doesn't have the same risk profile than the drive chain idea per se.
Yeah. Thanks for clarifying that. Yeah, and I hope that. I hope they stay with that, and I hope that it's not just a way to sort of boil the frog, right? Build up consensus, build up some support, and then implement something that is that's a huge security vulnerability.
And I mean, really quick to kind of speak to my opinion on motives, at least in Paul's case, is honestly, I really liked Paul. I've had a lot of good interactions with him before, but I honestly think that it's a combination of him just being very attached to this idea because of how much time he's sunk into it. And also maybe just a little bit, I don't think that he really sees Bitcoin like a lot of us do. I think he sees it as something that can grow and stay important, even if a lot of the core value propositions are lost or degraded over time, and that it's not really as big of an issue to kind of present this kind of security model that affects the main system, because maybe he just doesn't see Bitcoin as maintaining these kinds of qualities forever. And I mean, I'm really sad to see him go so personally into these attacks, because it's just like, Paul, if that is the case, and I'm not just kind of projecting here, well, a lot of us just think differently, and we're not okay with those trade-offs.
I think I can actually deny your second theory. But I mean, at least based on what he said to me, we discussed it a lot in Milan about his idea, and he said, I think that that Bitcoin main chain should be completely impossible. He then say that, but that of course that contradicts the idea of USAF in order to protect the funds. But he said, I think that probably Segwit and maybe drive chain should be the last modification, and then we could stay with the main chain, which is actually impossible to change forever, because we can actually enable any kind of innovation outside of it. So his original motivation was actually to create drive chain in order to make the main chain even more immutable. But of course, as we just said, then the security model of the drive chain proved to be not secure at all, and now is relying on consensus changing to make that secure. So I don't think that his original position was Bitcoin can change trivially. I think he had to get to that clearly nonsensical position because of the first reason you said. That's at least my opinion. It's hard to work on an idea, to put a lot of energy, time, and money actually of a block on that idea, to have some kind of running code, to have people that tells you, I mean, Adam Beck tells you that that's a good idea. Everybody tells you that that's an interesting idea, but then some major flaw in your logics makes this idea not viable right now. And then you just have to take it.
Matt was the guy that came up with this idea, not Paul, right? Matt Corallo. As far as I know, he was the one that wrote the first paper on the concept. And he, from day one, was saying, look, we're not pursuing this because it has this huge security issue and we haven't figured out a solution for it. So I think I think you guys are being really, really generous, and I appreciate that about like the nature of both you and Shinobi, that you guys are trying to find reasons that you think a decent person could end up in this state. For example, having just a ton of sunk costs, just really thoroughly invested, and then finding out there's an issue and not being able to reconcile that, right? I think that would be a very plausible thing. But I don't think that the evidence and the sort of the timeline really adds up with those sort of things. And I think, just to put this in context from my sort of overall perspective, there's two big ways to make money in Bitcoin. One is to invest in Bitcoin, and the other is to invest in altcoins and ICOs and kind of just general scammery, right? And market manipulation. And for somebody to put a ton of time into something that was abandoned by the original designer because of a security issue, to work on that, spend a lot of money, spend a lot of time on that, and then turn around and say, no, it's fine because we can just rewrite the history of Bitcoin. That's just too much, man. I mean, we're going way too far. That's beyond generous. And that's looking at somebody that's just, punched your wife in the face and ran off with your purse and saying maybe they confused this with somebody else. It's just too much. And then, you also mentioned who's funding this, right?
Yeah, Block. But the sad thing is that even if I'm not convinced of what you are saying, the thing is that in an adversarial ecosystem like Bitcoin, when you are in doubt, between malicious or non-malicious, you do have to assume malicious. So I'm not convinced of what you're saying, but I think that the safe mode right now would be to assume this is a malicious attack anyway, because of how the system is set. So, yeah.
Okay, so I mean, Block, just for everybody that doesn't know, is essentially Jeff Garzik. So Jeff Garzik is the one that's funding this development. He's been behind, a major player in basically every significant attack on Bitcoin over the last several years. For what it's worth, it's a fact. Maybe that's coincidental, right?
Also, I would add also Roger Ver sponsored directly the drive chain development of Paul. So you have another point of that. I always thought that it was causally reversed. So he tried to find a way to leverage the big block side in order to help to boost his idea. So for what I've seen, the fact that Paul contacted Gian for help, the fact that he accepted money from Jeff and from Roger, was exactly because he said, this is the possible solution that makes everybody happy, and I will try to divert big blockers' effort from the hard fork to this other idea. But of course, if you just list the names are those. So again, yeah.
Right. So again, I mean, the people that have been behind all the major attacks are now funding this. It's obviously an attack, and the explanations are absurd. But maybe this is, maybe there's some good hardness here. I don't buy it, but I appreciate there's people in the world that have had less exposure to con men on a daily basis than your typical security researcher. Because I guarantee you, if you tell this story to anybody at Black Hat, they're not going to hesitate to attribute motives. But then let's look at the other side, right? Because there's the other guys that are just more quiet in play. Former security researcher and Sergio Damon Lerner, who's been involved with Bitcoin. Have those guys been involved in any previous attacks, or any reason to believe that they might have ill motives here?
Well, I mean, to go back a little bit to the issue of the block funding, I usually try to temper the tinfoil hat side of my speculations on the show. But I mean, if you really want to try to connect as many dots there, going back to malicious actions or plans, then you really got to draw a line between Garzik, Andreessen, and Mike Hearn, and really look at a lot of the things that Hearn was proposing in day one. He was an open advocate for minor blacklists and effectively using chain analytics to kind of build up lists of coins that you could give out to merchants who would then refuse payments and contact law enforcement and so on and so forth. And the issue with that is it's kind of hard to get miners to comply if they're very decentralized and distributed. And so that kind of feeds into a lot of the big pushes for block size increases, which would have very rapidly changed the mining landscape into a more like degraded version of what we have today, where it's a lot easier to kind of bribe those miners. And then kind of roll forward a little bit more and look at Jeff, starting Block, the investments that they made in Scry for chain analytics. And then also look at some of the things out of MIT Labs, such as the Chain Anchor proposal, which Peter Todd did a very good write-up on, where they were effectively constructing a way to build an ID system on top of Bitcoin as the second layer, and then actually monetarily incentivize, effectively bribe miners to only mine transactions tied to the second layer ID system, and slowly roll over to the point where it's a transition period, like miners are participating, and then eventually you've got the majority and can now orphan blocks that are trying to mine non-ID transactions. And if you really take all of that into account and then look at the design of a drive chain and look at what the proposed security measure is, effectively a user-activated soft fork or hard fork, then you're effectively creating a balloon you can just fill and fill and fill with money until you pull that attack, and then leverage all of that value as the excuse to set that precedent, moving towards blacklisting and kind of centralizing and censoring things.
Or you don't attack it because of many game theory reasons that Paul is often mentioning, but you threat to attack it, and you use this threat as a leverage for any other possible side attack. So it's not even necessary that you take that money. You can just actually threat to take it if something else doesn't happen.
Yep, absolutely. Yeah, so I mean, there's a lot of connections there. It is always surprising to me how short the list of bad actors is in the space. The list of people that contribute to core and are trying to start companies and do good things seems like it's a huge list. Like I definitely don't see the same names 50 times. But when you're looking at things that over the last 8 years could have destroyed Bitcoin, it's like a dozen guys. What I was referring to with Sergio Damon Lerner is that he was a big supporter of SegWit 2x, right? And so we've got less, I think, history with him to be able to say, hey, this guy's doing it definitely on purpose. He hasn't really engaged us in dialogue, so I haven't heard from him, hey, don't worry about it. No problem. We're just going to destroy the whole value of the network, right? So I would say I have less reason to believe that he's being malicious, but honestly, anybody that attacks the network and does so with an attack that had a reasonable chance of really damaging Bitcoin in an irreparable way, and it was an attack that was a 5-year attack, right? I mean, like you guys said, the big block centralization of mining strategy was a really, really long period of time, and SDL jumped in on the last most viable push. So it's really hard to extend ignorance for me, but you guys, like you said, you assume bad motives when something's an adversarial network like Bitcoin. Anyway, I think that's a good call, but I do think it's good to mentally categorize people and actions, and it'll help us see maybe the next one coming.
There is one thing specifically related to Block as in Jeff Garczyk's company Block, that I want to point out that I think is very related and important to the fact that they will be, creating something where it will make it easier to steal the funds out of. Because one of the things that we reported on in December was the fact that Garczyk started this whole United Bitcoin thing, which was a UTX fork that would basically redistribute coins from so-called inactive addresses to other entities. And I guess for some reason they wanted to redistribute it to Ethereum and then a United Bitcoin Foundation. So clearly, I mean, that would be the biggest red flag for me, because that means they've demonstrated a willingness to basically take funds from people's addresses. Like, yes, it's a UTXO fork, so it doesn't affect our Bitcoin if we stay on the main chain, But it's obviously, if that chain were to get adopted, then people would be losing money. And so I think if a company like that has already shown a willingness to create something like that, it makes me very nervous about the fact that they're also funding something that could create a security model that would allow something like that to happen.
Yeah, and you know, just going back to whenever I was saying, like, you know, it's hard to gain support around the space because it's so small and everything. I think you made a great point about Mimblewimble, Giacomo. Like, you know, that just like came in, dropped off, and huge support. And you know, it's just like you know, like we're saying about just like all these actors lining up and everything, I guess, you know, yeah. And you do have to sort of take an adversarial position when you're looking at all the game theory and all this stuff. So, you know, as much as like I kind of agree with Shinobi, where it's like, I like Paul, you know, it's like I've sort of been following him for a long time. It's like, you know, you kind of have to take that position of like, this is adversarial and, you know, it's an attack. And, you know, I guess you have to assume, you know, bad intentions, just to try and shore up the defense as much as possible.
Yeah, that's a good segue to the good news of this whole story, in my opinion, and that is, I think we've discovered a solution, right? So when you're doing security research, you don't want to just break things. You want to be able to design solutions, because that's more fun. It's always more fun to build than just to break. And I feel like we've got a really good solution. And that is, if you think about the way that this is being set up, it's basically something like the DAO, right? Where there's a big bunch of money and there's a way to drain all of that money. And everybody acknowledges the way to drain all that money is a certain set of actions, right? Do a certain type of mining with 51% of the miners, right? You're allowed to transfer the funds. So I think the solution is simply just to acknowledge that fact and then be open and transparent about an effort to drain those funds. So what I've said in the threat model is that as long as people like Paul understand that we're aware that this is an attack and we're not good with it, and that those funds represent a real economic threat to Bitcoin, and so we're motivated to basically reduce those funds to zero, drain them, do whatever we have to do to protect Bitcoin and protect existing holders, and frankly, other people that are going to get suckered into putting their money into something that's insecure. And then we can just publicly say, we are going to drain the funds, right? And we are going to sort of publish our progress towards doing that, right? Maybe we only start out with 2% of the miners signaling a willingness to pull the funds. But that's enough to where I think most users would be aware of it, right? It's going to be very hard to convince somebody to put money into an account, even if there's just a small number of miners that have already said, yeah, I'll take the money if it gets big enough, right? And I think the other effect would be, as the pot gets bigger, more and more miners would say, yeah, that's probably in my best interest to pull those funds. And some of them would be motivated because they want to signal and prevent the network from being damaged, and some of them would just want to grab the cash. But I think the net effect of a clear, open willingness to drain those funds is that the attackers themselves are not going to be very motivated to even complete the software project. So my personal feeling is that now that that's clear, it's been articulated, like we've done the muck raking. I really don't see these things getting deployed because nobody wants to create a vulnerability that they're not likely to be able to exploit. And if they do get to exploit it, it's not going to have very much funds in it.
Mm-hmm. I mean, it's always best to be proactive in these kinds of things. I mean, we've all seen how quick attacks and problems can come out of nowhere. But I think we've plumbed the entire sidechain model to the depths and hopefully left everybody with a good understanding of the trust models involved. So I guess Lightning Network's on the horizon. How are people going to deal with, giant $30 fees and whatnot, opening channels? I mean, that's going to be a big, whoops. $30 fees? Anywhere? Can anybody see any?
Yeah, that's when the fee market will push people to open Lightning channel. The spam attack doesn't seem so important to run anymore. Curious.
It's always really suspicious timing when the giant fees come plummeting down. It's never an organic, like, slow. It's just poof right off the cliff.
Yeah, I think that's just a great example of, like you're saying, like, people wanting to use Lightning, and the spam situation clearing up a little bit, and yeah, definitely a good time to push a transaction through. And I need to hurry up and sync this Lightning node so I could catch this break while it's here.
Yeah, is Coinbase consolidating all those UTXOs? Because now's the time to do it. That's probably why they were never worried about it, because they knew that it was spam, and they knew it was going to be impractical to keep funding forever.
I'm honestly kind of really shocked to just like how could they not keep it going at this level? Because there's really a lot of sophisticated things that you can do. I mean, I don't have the source available now, but it's definitely in a past episode. I'll try and dig up in a second, where we've seen attacks where, like, a lot of dust outputs are peppered to other people's addresses, and then just because the fee estimate is very poorly done on the wallet side, the wallet will overpay fees, and the miners don't really have to do much more than pepper dust and lose a tiny bit of money for the increase that can cause in fees. And there's really a lot more games you can kind of tactically play besides just flood the network with transactions. But
yeah, no, there are, but this attack, the one that they were doing wasn't costless, right? The mining empty blocks and shoving a lot of garbage transactions in. You're not getting all of them, and maybe they're getting less and less, right? I mean, the hash power is going up, so maybe the guys that were behind it was getting more and more expensive. I mean, I think it's probably safe to say that it was getting too expensive, or they'd still be doing it. And we can theorize as to why, unless they're going to just giving us a break so that it has a bigger impact when they do it again soon. But I really would like to think that that Lightning has just made it clear that it's not a cost-effective attack anymore.
I mean, it's definitely not been pleasant dealing with the fee market, but regardless of it happening a lot faster every time this happens than I would think it would. I mean, eventually they're going to bleed themselves out of money, and it's like there's really nothing you can do but wait. And all the stopgap Band-Aid solutions that people propose, aka just raise the block size, like all you're going to do is just make this problem worse and make it cheaper and just keep lengthening the time horizon on which these kinds of attacks are actually viable. But I really hate to be bringing up, I think, like a third story in a month along this note, though. But I'm sure everybody's heard about the attempted exchange robbery in Canada. This is, I think, becoming a full-on trend. I mean, if we go in the Motherboard article, one of the employees was actually hit in the face with a gun, and they were pretty much all tied up in the office. And thankfully, they didn't actually get any Bitcoins, but like this really is becoming a full-on trend at this point. Like there are like cryptocurrency robberies are a thing now. They're not just the fluke circumstance that the one person found themselves in and it just happened. Like there are actually people out there seeing this, realizing this, putting this together, and actually planning these kinds of robberies.
Yeah, and I also want to point out, because before I came on the show, there was a story that I saw that someone from Oxfordshire in, I think, yeah, that would be, so basically a UK trader, he had someone attack him at his home. So it's not even just exchanges, it's traders, it's anyone who's into Bitcoin. Like, I can't imagine if you're a person who's trading, I mean, I know you guys like to hang out in the chat rooms and talk about all that stuff and where you're traveling and all that, but I feel like that's like the amount of risk traders take by doing that, especially if they're bragging about how much money they're making or how much money they have. you guys have to be extremely careful, because anyone can become a victim of this kind of stuff, especially if you're, if your location is known, your general location. They don't even have to know where your house is. They can just hang out in the town where you say you live for a while and see if they can find you. And it's worth it. If you have a lot of Bitcoin, it's worth it for them to just hang out for like several days waiting for you to show up and then find where your house is. And I've also noticed that traders in general, if they don't have an information security background, most of them are not good at hiding their location anyway in the first place, just through the use of their devices. And so that definitely needs to be worked on better. But yeah, this is a huge vulnerability that businesses are getting attacked, and people as well.
Yeah, it's just like another great example of just like how much it's important to take care of, to just mind your P's and Q's if you're in the space at all, and like, just be on the lookout. And, I think that Ottawa situation turned out all right. Like, nobody really got in, and, but they were attempting to. And yeah, I mean, just as time goes on, it's just going to be more and more something where everybody's got to pay attention to. And, I don't know, hopefully it'll just start to, I don't know, hopefully there'll be something where it'll just seem like it's not worth it anymore for these attacks to try and happen, but it's hard to imagine that's going to happen. I mean, as value goes up, more people are just going to try and get it. So.
Yeah, I think that if we want to see the silver lining of this problem that is getting worse and worse, is that as any kind of trouble, this will also be useful to learn, and this will teach people one, security. So basically, lock bitcoins into multi-sig or time locked. I mean, security, good security, in order for kidnappers and thieves to know that you cannot access to your Bitcoin, just like is common knowledge about bank robberies or stuff like that. And the second is anonymity. So right now we have traders with their face on. Killer N mask is a good example of what do you usually do when you work in a security critical environment. Be a core developer which is anonymous is better than be a core developer with the name renowned. Myself, I probably use my face enough. We should be more anonymous. We should have probably more anonymous business than nominal business, and people will also be incentivized to actually protect the Bitcoin fungibility and anonymity on chain. Because if it's very easy for people to de-anonymize people on chain, as it is unfortunately right now, then everybody will have more incentives to actually work on stuff like Lightning, Schnorr, mask, confidential transactions, and stuff like that. Because this kind of de-anonymization tactics are so easily to implement right now that everybody is at risk, because everybody can see how much money do you have.
Yeah, absolutely. I mean, I'm not a huge Bitcoin holder. I don't have a ton of money, sitting around in my house, but you don't have to have a lot in order to have more than the bank down the street, right? The bank down the street has bulletproof glass if it's anywhere near a freeway in the United States. And they typically try to keep less than $10,000 in bills on premises at any time. And those guys get robbed all the time. So if you've got $3,000 or $4,000 and you don't have bulletproof glass and you're closer to a freeway, and you're talking about untraceable electronic cash versus bills that are very likely, there's a decent chance that those things got scanned at some point in the process, right? You're looking at a much riskier situation than if your house was a bank, and you really got to take that into account.
Yeah, and I mean, I've been having the pro-gun, anti-gun conversation with a lot of Bitcoiners lately, and I mean, if you're uncomfortable with guns, or you don't like guns, I mean, there are other things you can do, like get a dog, get some kind of security system. But if you aren't comfortable in taking that final measure yourself in owning something like a firearm, like at least do something that adds some higher cost or some way for you to disincentivize it. you know, like take some kind of action. Don't just hear like people kind of shoving the gun argument at you and just like not take any kind of security precautions because you're not comfortable with the one proposal that somebody's adamantly throwing in your face. Like at least do something.
Yeah, I mean, it's the you don't have to be faster than the bear. You just have to be faster than your friend sort of story, right? You don't want to be the softest target around with the most incentive to consume you, right? And again, the bank down the street with the bulletproof glass and less than $10,000 of cash on premises very often has an armed security guard. So if you don't want to be the best place to go for money, you're going to have to either have a lot less money or have more security than the bank down the street. It's just simple incentives. And yeah, I mean, I think if you just keep that in mind, right? You keep in mind the sort of existing playing field and how often those people are robbed, it'll probably create a whole different mindset, I hope.
You guys like always get me so worried because I'm like running around with like a very obvious location in my face, like just like for anybody to see. But yeah, like you know, I don't know. I've like been thinking about taking some jujitsu classes and carrying a little blade with me or something, and you know, I keep an eye out. But I don't know. For the most part, I hope that we can find a solution to this where people will start to realize, like, you know, it's not worth it in the long run. Kind of like the consensus on robbing banks.
And also the thing with Andreas Antonopoulos set a very bad precedent, because if now you go on Twitter and you say, guys, I'm not so much Bitcoin rich, people will start to donate you money. And so you will end up being provably rich. And that's a very, very bad security situation.
Yeah, I think Samurai Wallet's trying to fix that with those payment NIMs that they got coming up.
Yeah, please do not donate to me. I don't want to have more money than I can secure. I really don't want a price on my own head. Thank you.
Well, if you want kind of a hilarious option, I heard a story of an American woman who trained her yard squirrels to attack intruders, and apparently that was very effective. Not because the squirrels are naturally excellent at attacking people, but because people are so stunned by the fact that they're getting attacked by squirrels that it kind of works. So if you want to go that route, if you're in an area that has squirrels, apparently you could train them to attack people.
So guys, multi-sig, plausible deniability account on your hardware wallet, and squirrels.
That's a good rundown.
And drop $1,000 and pick up an AR-15 if you're in the United States, and spend, you know, $200 on some training, and either that or hire an armed guard if you've got more than $10,000 on premises.
It never hurts to pick up a dumbbell or two either, you know.
But it's, you know, it's just all about do something and not nothing, because some exuberant person like me decides to use it as the pro gun time. But I guess how much more time you got, Giacomo? You got enough time for the next story on the credit ratings?
Yeah, I think I have to leave you right now. If possible, I just wanted to leave one quick flash about sidechain. The discussion that we had doesn't mean that there aren't interesting options out there about secure sidechains. Actually, Gregory Maxwell already in 2014 wrote about the possibility to use ZK snarks, the same technology which is used in a way that, okay, let's not open that topic. Anyway, the same technology which is used by Zcash, Gregory said it could be used to create proof that the state of the coin on the sidechain is this, without having the nodes validating the sidechain. So you could use zero knowledge proof. He called that basically coin witness. It was a lot of time ago. The reason there is not an active proposal right now is basically because ZK snarks are not ready, and then they have been already surpassed by ZK Starks and then ZK Boo, and so it's a field which is moving too fast to build reliable solutions on it. But it's interesting, so I'm not losing hopes about secure sidechains anytime soon.
Yeah, yeah, awesome. Well said. Yeah, I'm still very, very excited about what we're gonna have when it works. And yeah, you're right. It's almost like we're making too much rapid progress on the fundamentals and making them so much better at such a pace that it just doesn't make sense to try to spend a year coding it up when it would be obsolete before it was done. So it's kind of a good problem to have, and still very, very excited about what we're gonna have on sidechains.
Yeah, so thank you very much for having me here. I'm sorry, but I need to leave you for the rest of the news.
Oh, thank you. Okay. It was a pleasure having you for the first half, Giacomo. Thanks for coming on.
Yeah, see you next time. Bye.
Later.
All right. Well, I guess JW, I think you're going to know which link I need in addition to this. But woo-wee! Cryptocurrency credit ratings, everybody. Okay.
Oh, man.
I can't do anything but highlight this. Say insert laugh, and then kick that off the screen, because this whole thing is a freaking joke.
Yeah, it's
we're not gonna make a bit more fun of it. I mean, there's a lot of hilarious things in that article.
Okay, we can go through it and make fun of it, but I can't take any of this seriously on any level.
Yeah, so I think, well, one of the things I thought was hilarious, I don't know if it's in this article or possibly another one that they posted, but they spent a lot of time explaining how they're not like the same credit agencies that caused the financial crisis in 2008. They're like, we're different from them. First of all, our rating system is different. We have like A, B, C, D instead of A, B, C or something like that. But they went to a lot of effort to like explain how they're not like that, except, you know, I mean, essentially, the problem here is not, we're not necessarily doubting that, you know, whether you can function as a credit agency or whether you're the least scammy of the scammers. I think the problem is that the metrics on which you rated these cryptocurrencies or tokens is fundamentally flawed, because I think the two main reasons they said they gave Bitcoin a C instead of a B was environmental concerns. It's uses too much energy, and we've talked about why that's bullshit a number of times. And the second one was, I think, scaling issues in general or something like that. I was like, that's a really poor reason to use, because Bitcoin has been around it was actually fees. I think it was fees. The reason, so the problem is fees. And it's like, first of all, anyway, scaling fees are kind of related, but Bitcoin has been around for, over 9 years now. It's done pretty well with its scaling issues. It hasn't had to do an emergency hard fork like Ethereum. The fee problems are a temporary issue. That's one of the biggest things, is that people think that the fee situation is a long-term thing, and it's actually most of the time it's a temporary issue. So all of these things are apparently the reason why they gave Bitcoin a C and Ethereum gets a B. I like how it says there on that, despite some bottlenecks. But I would be okay, I guess, like if you gave Ethereum and Bitcoin the same rating, like I would accept that. I still think it would be a bit ridiculous, but it wouldn't make me think, like, I wouldn't make me question their judgment as much. But to say that Ethereum gets a higher rating than Bitcoin, that's ridiculous.
Yeah. And how is Steam above Bitcoin? Like, that's what?
Because Rick, it has a social network. It has like a utility attached to it. That's why.
Oh, okay. They got the network effect, social network, I guess. What?
I mean, its value has gone down like over 90% since its creation, but whatever. It's good.
Yeah, it's really comical. It really is. It's just like, yeah, we're stepping up. We're better than all the ratings agencies before. You don't have to worry about us being like, some oracle that's going to lead you to where you have no money and you're broke. Like, yeah, it's, I don't know. It's kind of funny. Like, they get hacked. I think that's pretty much just like a given in this, like, I don't know, maybe we'll start to see less of these stories as people realize, like, you're attacking a really strong network there whenever you're trying to pull some BS stuff like that. And a lot of these guys that have value on the network spend their time counteracting this stuff. So, hopefully as time goes on, people realize like these ratings agencies are just like, they're just BS, really.
Yeah. So who wants to see? Oh, sorry. Go ahead.
Yeah. I mean, the thing I don't understand about the fee thing is that, the whole purpose of these credit ratings agencies is to recommend things for people to invest in, which is a completely different use case than someone who wants to use Bitcoin as like a currency. Where they're going to be making transactions for buying things. That's where you get affected by fees. If you're just buying Bitcoin or Ethereum to invest it, you're not going to be moving it around a lot. And so the fees don't really matter. You just wait until a time when the fees are lower. So I don't even see how giving Bitcoin a lower score because of a temporary fee situation is a reason to make people stay away from it as an investment.
They're just trying to pump the Ethereum nonsense. Boy wonder, everybody, we got a boy genius. So who wants to go over a little bit of a rating system setup not based on bullshit?
Exactly. Thank you. So I'll give you guys a quick overview, and then you can tell me the stuff that if any of it looks interesting. Basically, what I wanted to do was create something that was objective. Like, I'm obviously more of a fan of Bitcoin than other technologies. But I didn't want that to really be an issue, right? So I didn't want to say like what's cool about it or what's not. So what I did with this sheet is I just tried to keep it like pure facts, right? So what you've got is my best description of the goal of what each of these top 10, cryptocurrencies is, what they claim as their capabilities, and then what their actual capabilities are. And, obviously there's some technical judgment when I have to say what their actual capabilities are, but shockingly, there's not as much as you might think. And I really haven't had any pushback from any of the altcoin shills that love this stuff telling me, no, Litecoin actually, there was a couple things. When I initially created the sheet, Ethereum and Litecoin, I said that all of the claims were false. And I did have to step back from that because depending, if you want to be charitable, Litecoin does have more transactions per second. And if you want to be charitable, Ethereum has had a use case in ICOs, right? So, but other than those like small things, nobody's really pushed back on this much. And I think the results are even shocked me as I just went through and tried to put down what people say and, basically what they kind of admit is true about the difference between what they say and what a coin can do.
I think the most interesting thing is the market cap actually taking total supply into account and not distorting things with just temporary views.
Which that places
and the thing that surprised me most in general about any of these rating systems is that I don't even know, like the EOS thing, I can't tell the difference between most of these coins anymore. Like some of the ones that were in the credit ratings, I was like, does that one even exist yet? I don't know. What is it for again? Like they're giving ratings to things that like most people have never heard of. Like no one is actually using it. And it just astounds me. It's like you're really going to try to get people to invest in something that has only existed for a few months. That seems like a bad idea.
Yeah, like you were just highlighting, Shinobi, like there's just some interesting things where it's like these ratings agencies where they just spit out an A, a B, or C, a D. Like this list is just like, I mean, like, you're right. As you distilled it down, it's really as comprehensive enough to where an average person should be able to look at it and get like a quick cursory glance as to what these coins are trying to achieve and whether or not they're achieving it and all this stuff. And just like the 11 quadrillion market cap on Ethereum, whenever you factor in that total supply, is just really does show like the absurdity. Like, isn't that like more money than the entire amount of money on the earth or something like that?
Oh yeah, by far. I mean, it's 11,000 trillion. It's a number that I was sure I made a mistake on until I ran it a few times. But then when I stepped back and thought about it, Ethereum does increase the supply by 10% per year, right? And maybe they'll change that in the future, but all I can really say, I mean, if I'm going to try to guess what they're going to do, I'm going to say, no, they're going to probably leave it at the same inflation rate, because the only reason they've said that they would change it is if they switch to proof of stake. We all know proof of stake is a joke. They really don't seem to be taking steps towards doing proof of stake. It's still a good story, so I don't think they want to drop it for marketing purposes. But I don't think it's unreasonable to assume that they won't move to proof of stake. They'll stay with proof of work. And if they do that, the inflation is 10% per year. U.S. inflation, U.S. dollars is maybe somewhere between 3 and 6%, depending on who's doing the calculating as far as the supply. So it's possible. You could definitely run a currency with a 10% per year inflation rate. But instead of a candy bar, when I was a kid being 50 cents and now it's $1.25, you're looking at something more like when I was a kid, it was 50 cents. Now it's $2.50, right? So it's not catastrophic. But if you use the 120 years that we have left of issuing Bitcoins, that takes you to the year 2140. And if you apply 10% per year to Ethereum until the year 2140, you end up with a shockingly large number. And that only makes sense because if you had $90 million and you invested it and you earn 10% interest per year, you'd come up with something pretty impressive. And it's actually 10 trillion. So the total number of coins, if you assume they stopped when Bitcoin stops, you'd end up with 10 trillion ethers. And that just results in some pretty interesting implications.
Oh, so you're saying in terms of the inflationary effects, it would actually be better to hold the US dollar than to hold Ether?
Oh yeah, absolutely. I mean, I think you could argue it. Maybe in the last few years we've exceeded 10%, but I don't think anybody. There'd be like one crazy guy saying that. Generally, the U.S. says that they're doing 2 to 3% per year. The net effect seems to be more like 6% per year. So I think you'd be by far the most pessimistic on the dollar if you said it was 10% per year. So yeah, I think if you believe that something is valuable because it's scarce, Ethereum might not be the investment for you.
Yeah, the whole thing it's just a joke. I mean, like the title for Kyle's piece here, it just says it all. I mean, just looking at some of these shit coins here that they rate higher than Bitcoin. Like Nick Carter here actually calls bullshit on the entire volatility argument objectively with data. And I mean, even Charles Hoskinson from Ethereum Classic and Cardano is calling bullshit on the fact that Bitcoin wasn't given an A rating against everything else. I mean, like,
yeah, specifically on the volatility point, I believe the ranking for least volatile coins, I think the least volatile is Tether, although that may not last for very long. It was Tether, and then I can't remember whether the BAT token or, I mean, because the BAT token is an extremely controlled KYC'd environment. So I believe that one I think is above Bitcoin. I'm not quite sure. It's Bitcoin and BAT are very close, but anyway, Bitcoin as a cryptocurrency is the least volatile out of all of them, besides Tether and BAT, maybe.
Mm-hmm. And you just reminded me of that. That I have been thinking since we went on air that I completely forgot to add something to the show notes. And yep, this is it. So it's when Audit, what's going on?
Well, let's just say I know a lot about the situation. I'm not going to comment very much on it. To say, though, I did find it funny that Fluffy Pony said, because there is apparently a dispute, CoinDesk was a bit confused as to whether the auditing agency had said they had broken up relationship with Tether, or whether Tether had broken up relationship with the auditing firm. And I believe Fluffy Pony's comment was that they should change their Facebook relationship status to "it's complicated."
Mm-hmm. I mean, just to speculate from my point of view, I mean, like this entire situation is just it's so silly at this point. I mean, like to summarize, like, not making any absolute comment about Finex or Tether, the specific assertions that Bitfinex makes on the fact that there are no bank accounts in existence is just ridiculous nonsense. At the same time, there is a lot more that Bitfinex or Tether could be doing to clarify this situation. And just like the way that it's looked at binarily, like some kind of tribal issue where you pick a side and yell at each other, is ridiculous. But my take on this piece of news personally is just that the reputational intertwining with the auditing firm and all of the shit being thrown at Tether and Bitfinex, I think just got to a point where Friedman didn't want to deal with the PR aspect of things and just pulled out of it. And I mean, you know, there's really nothing else I can say besides that, except when audit. I mean, it shouldn't be this insanely difficult to provide some kind of proof of solvency. I mean, I get that, yeah, you know what I mean.
Yeah, I mean, my official stance on Tether and Bitfinex are just in general that they're very poorly managed companies, and I think that's their biggest issue. Most of the stuff about solvency, like, that doesn't even interest me. The real story, what's really going on, is way more interesting than all of the claims about solvency and all that. I did find there was a funny tweet about a week ago. I've just found it from Laurent, who said that that people who are concerned about, you know, whether Tether is backed by anything or being printed out of thin air, like, you should actually find it concerning that the U.S. dollar is provably being printed out of thin air. It's not really backed by anything except for proof of military industrial complex, basically.
Yeah, I mean, it's just, I don't know, it's incredibly silly. There are a bunch of issues with Finex. There is a lot of things they've done that I find problem with or disagree with, but the entire notion that they're just printing money out of thin air is ridiculous to me. As from digging through the rabbit hole of Bitfinex myself, it pretty much all just stems to the Finex announcement about bank wires being refused, and Bitfinex to just wildly distorting that into meaning their bank accounts were closed, money was taken away, and they don't even have an account to put money in. And just to take the claim that they're printing Tether out of thin air at face value, when that is the air quote evidence to back that up, I think is the most ridiculous thing in the world. But by the same time, I think it's also ridiculous how calling bullshit on that taken to mean like just asserting there is absolutely no problem or issue with either of those companies and anything else. And just the way that social media FUD has been used to just so ridiculously polarize that issue and kind of divorce it from any reasoned assessment of the situation, it's just ridiculous to me. Like, I really even hate touching on this topic because I just know a lot of people are going to hear this and kind of shove it into the like two-sided like meme war and refuse to actually try to step back and look at the situation objectively.
Oh yeah,
But,
like I'm sorry, I just stepped out for a second. Did y'all talk about how like the tweet that for this article, like there was even like some, you know, like the wording on it just like aggravating to the community. It's just so divisive that like even the tweet about the article was like, oh, sorry, we gotta, you know, everybody's so touchy about this.
mm-hmm. I mean, I guess JW's got to stuff out and stuff some food in his face too. I guess he's going to be going on the Bitcoin news show with Francis and Vortex later today in about, I think, an hour, JW. So
actually in like 10 minutes, but yeah, they're slumming today. Apparently somebody canceled, and yeah. No, it should be fun. I haven't talked to those guys a whole lot, but I'm looking forward to it.
Mm-hmm. But yeah, you know, I'm sure, you know, be worth checking out after us today. I hope you'll stick around for the rest of us, though.
Yeah, I'm catching it.
See you guys. That was fun.
Catch you later.
Take care, JW. But yeah, I mean, honestly, if you guys are okay with it, I'd like to just push past the tether thing, because this whole thing just it irritates me.
Yeah, I mean, it's been flamed up too much.
Mm-hmm. So you're the one who brought up this ATM issue, right, Janine?
Yeah, I hope I'm not freezing. I feel like I keep cutting out, but
no.
Okay. So yeah, I just saw this today. It was actually reported yesterday. I did see it briefly, but I didn't look into it. But basically, there is some malware attacks that have apparently they are identified as starting in Mexico, and they have now come over the border to U.S. ATMs. And basically, they're calling it jackpotting, which means they can basically empty the ATMs of money. So that's pretty bad. And apparently banks are quietly being warned about this, but obviously it's not that quiet anymore, because this report is now public, at least on Twitter. And so, yeah, you probably should be worried about that fact. And I think I actually I first saw this story because Mr. Hodl tweeted it, and he said, buy Bitcoin. So obviously, if you hold Bitcoin, this is not a problem for you. But if you have a debit card or something and you need to do withdrawals, you might want to be careful, especially if you're in the southern states along the US-Mexico border, I assume. I mean, obviously, that's not really how malware spreads. It doesn't spread as much from... it can just be released on the internet and everything. But obviously, if you're at greater risk if you're closer to where it came from.
Yeah, I'd be real interested to see how this read into it more, just because I'd imagine if it's like you're withdrawing all the cash from the ATM, you'd have to be there locally. You just upload it and then sit in there and just try to unload all the cash from that as quick as possible. Just hope nobody pulls up behind you wondering why there's $100 bills spitting out of the ATM like crazy. I don't know. It's interesting for sure, and it just kind of highlights how insecure the current system is. I mean, I've seen guys loading up those ATMs, with no security, just standing around by themselves with stacks of hundreds, and there's lots of holes in the current system, and yeah, hopefully we can keep our value protected with Bitcoin.
Yeah, and I've heard that obviously, most of these machines run on Windows, which is such a catastrophe in itself. But they run on Windows XP, which is no longer supported even by security updates. So if you are a bank who runs an ATM and you haven't updated the software, apparently some banks haven't updated their ATM software since the 1980s. So good luck with that. You should probably think about updating that soon.
Yeah, it's ridiculous. Even the here in Illinois, something interesting I found out. Pretty much arriving late for a drunken walk to get beer. Apparently, our lotto machines run on Linux. So the people who run the lottery are intelligent enough to understand the way to operate secure systems. But the banks that literally manage almost all of the money run their things on Windows XP. What the hell?
Yeah, I mean, I guess if you're gambling, you're like Andres has said before, if you're a criminal, you're one of the first adopters of a new technology because you operate at the nexus of highest risk, highest reward. So if you're doing lottery stuff, you better have. I would be curious. Is it just Linux in general that they said they used, or do they use a specific distribution?
I'm not sure.
Let's go into the Linux war.
I was pretty much there for the daily reboot for the machine and saw Tux and the kernel getting booted up and went, oh, that's kind of interesting. I wouldn't have expected that.
Yeah, I bet they hold that close to the chest. But yeah, it definitely does show that, where it's people that need that security, they're going to take those extra steps because it serves them well. And I just God, using this outdated software, and it's these people are supposed to be accountable for your funds. That's their job, right? Is to make sure that your funds are there and everything. But I don't know. I guess it's that like you know, cash is meant to be disposable, and so like you know, protect your numbers or your account, but you know, like just cash is just bleeding out the system.
Mm-hmm. And I'm sure this next thing has probably been plumbed and memed to absolute death. But what's up, Bitconnect?
Hey. Lawsuit.
This is probably the absolute funniest thing in the world. The actual court document for a class action lawsuit is quoting Alice in Wonderland. Like I see like this I don't know what to make of it. It's just weird. It's surreal. This is like the perfect example of just how weird the world is getting. That this is how they're trying to paint this in a way where like court documentation is going to be digestible to the actual people who sit in judgment. They're starting off with an analogy to Alice in Wonderland.
I don't know. That's like the Bitcoin space, right? Everybody falls down the rabbit hole, and these are the kind of guys where they'll take you down a path you don't want to go.
I love how is it like the list of defendants or plaintiffs at the top? You go to their list of names, and some of them actually list their handles, like Crypto Nick, Trevor James. Oh, so now we know Trevor James is actually Trevor Brown. I love there was a GIF going around. Or I've apparently been told. See, GIF, I should be like giraffe, right? That's why you say GIF. But then some people think you should say GIF. It's like a whole war, apparently. I'm not too militant about it. Anyway, there's a GIF or GIF going around where Trevor James, aka Trevor Brown, is saying, "You didn't really lose your money. Well, you actually lost your money."
Yeah, just that little 10-second clip. It's like, oh shit.
Yeah, and some of it's really sad because like there's this there was also this like music video of that really crazy guy who was up on the Bitconnect stage and like making all these weird vocalizations that I never want to hear again in my life. And there was a 17-year-old kid featured in that, and he was actually a Bitconnect investor. So there's like some really young people apparently that were involved in this.
Yeah, it looks like
the whole thing is just silly. Like, I mean, like I don't understand how they thought this would go any other way. I mean, the companies are being listed as responsible. All of these people shilling on YouTube and social media are pretty much being painted as advertisers or whatnot for the project. I mean, it's literally something advertising insane, like unpromisable gains. I mean, like,
yeah, I mean, like that's just where it's like, you know, they have to have something put down against them because it's so ridiculous. It is like, it's almost a cartoon how ridiculous it is. That infamous video now where like that guy Carlos, he's become like a meme, and you know, it's like they were just really, you know, pandering to a lot of retired people. I mean, like this lawsuit's out of South Florida, and you know, like just taking advantage of people, and it's just it got to a fever pitch to where if there wasn't some sort of response by the SEC, then you know, I don't know how anybody, like there could be any real sense of accountability, because that was just like, when it comes to like the tip of the main thing where people look at it and say like, that's an obvious Ponzi. It was one coin, and now it definitely was turned into Bitconnect. So it's good to see it, you know, get thrown down. But I'd have to disagree with you, Janine. I think Carlos up there might have been, you know, he's making memes for years with this. Hey. I saw a crypto graffiti post that was really funny, where they were comparing like who said it better, Carlos or Fat Albert. And yeah, I still don't know on that one because they're both pretty damn entertaining. It's going to be fun to watch for times in the future too. Hey, hey, hey. I almost can't even remember Fat Albert say hey, hey, because Carlos is just like stuck with me now.
Memes will do that. They will root out inferior memes and occupy that brain space.
Do we actually know what that guy's name is? Is he listed as one of the people in the
Yeah, I think he's in
action?
there.
Or
Carlos.
oh my god, that guy is going to that guy is going to be infamous.
Well, he's already on Twitter saying like that he's getting like yelled at in the airports. You know, like people running up to him just screaming "Bitconnect," and it reminds me of like you know, Dave Chappelle when he was really like disturbed that everywhere he went somebody yelled "I'm Rick James, bitch," and it's just like I could imagine him just getting everywhere he goes somebody yelling "Bitconnect" because I mean, like I've told this anecdote a couple of times already, but it's like it got so ridiculous that I was sitting on my balcony and a guy walking his dog and like a little 2-3-year-old kid that probably couldn't even say a sentence was just screaming, "Bitconnect, Bitconnect." And he just kept doing it all the way down the street. And I wish I had grabbed some video of it because it's just like, I don't know, it really just shows like how like penetrating this stuff is. And like yeah, Carlos, he's Carlos Matos 80 there. Yeah, he's penetrated the meme verse pretty hard with this one, maybe a little too hard.
I'm honestly not sure if this is a parody account or actually him, but I really don't care because it's fucking hilarious.
Yeah, I like to think it's true. It's true.
Yeah, I mean, when was the account created? If you go to his profile.
Dun dun dun. Yep, January this year.
Oh, okay.
Yeah.
Someone like yes. So anyway, it's funny anyway. Because that's one of the famous quotes that was in the music video about how my wife left me.
You say this is a scam? No, no, no.
Everything funny has to not be real. Damn it. And I guess to slide along, it'd be a little remiss not to at least mention the Coincheck hack of like $500 million. Yeah, I don't know what the hell they were thinking stealing Ripple. And to be entirely honest, I still don't know what the hell NEM is or really care what it is. But yeah, I mean, exchange hacks, I think, are just going to have less and less of an effect as time go on. I mean, we had a dive to like 10K because of that, and we're already back up in the 11,000s. I mean, it's like a little blip unless we crash again from here.
I believe NEM stands for not even money.
Yeah, that's funny. Yeah, but I think it I don't know, like JW was saying earlier on the show about how like these exchanges they get hacked and like a lot of people they don't really know the full story behind it and they just see Bitcoin hacked and Bitcoin exchange hacked and they don't look in to see like it was these other tokens that might have, you know, bigger security holes in the way that they do business with the exchange. So that's what was taken and you know, yeah, we saw a little drip from it, but like yeah, we're right back up and you know, it's like once again, I think we did drop below 10, but only for like an hour. It's like I watched like that. How long have we dropped below 10? It's like less than a few hours. That buying pressure is pretty heavy down there.
Honey Badger's getting more resilient. And I guess on that note, I think these are the last two things we got for the day. But Zap is now got a beta release out for testnet, so that is even one more Lightning Network wallet that you guys can tinker and play with. And I'm sure he would appreciate help with any bugs, although I'm not imagining there's going to be too many based on LND. And then
yeah, and I want to point out he did say that if you want to use it on mainnet, you can. You have to configure it yourself. I mean, obviously do that at your own risk, but if you really want to, you can use it. You can use it on mainnet.
Yeah, I was just going to also comment that, yeah, like I've been syncing this stuff up going through the command line, and to see a GUI wallet come out, I'm like, okay, I'm going to jump on this. And like, I might be fiddling with those, with that, you know, with the technical aspects of it to see if I could get it working for mainnet. Sorry, I kind of lost my word.
But yeah, I guess on that note, you can earn the reckless hashtag, but there are still bugs. You can lose money. You know that walking into this if you start messing with things on mainnet. So it's nice to report bugs. I believe Udi Wethamer said this on Twitter. You know, it's nice to report the bugs, but please, if you lose money, do not waste developers' time expecting them to get you your money back. If you are tinkering with this on mainnet, you walked into that full well aware of that risk, and it's frankly not their job to get your money back if you take that risk and draw this for short straw. But I guess in other nice news, Square is pushing Bitcoin out more. In the show notes, there's the whole walkthrough on how to buy and sell if it's available for you on their own website. So, hey guys, you know, cut up those other cards, cancel those other accounts, and let's start actually applying market pressure to idiotic, irresponsible businesses in the space and stop expecting them to just frankly pull their heads out of their ass.
Yeah, I mean, like, you know, I'd heard in the mumble that this was available now through the Cash App, and I went in there and noticed that I didn't have it, but I looked on the internet real quick and saw it was like I was just didn't have my phone number put into the app, and like then it gave me access. So like you got to have your email and your phone number put in there, and you could get access. And yeah, definitely nice to have the competition there to where, like, you know, guys like us, we could start using this Cash App card instead of the Shift card, and yeah, like you're saying, really put the pressure on Coinbase to make the right moves here.
So I guess anybody got any last thoughts for the day?
Honestly, I'm kind of like running into a blank. Just that you know, check out JW's like comparison sheet there. Like I know, like we were saying, like he was saying he hadn't gotten too much pushback from it, but I think that that's kind of some unpopular work that needs to be done as far as just sort of like putting it out there as far as what these all are trying to achieve, and you know, an easy way to educate people. So you know, like if we could spread that around and get feedback to them, and it'd all be helpful.
And anything from you, Janine?
Yeah, I just thought it would be good to show this BISC chart from I think it was last week. I thought it was pretty interesting because they had a really huge spike in volume in January. So that's cool. More people are jumping on to decentralized exchanges that don't screw around with your money.
That's a very viable alternative if you're just looking to buy and hold. I mean, why not?
Yeah, like I'm actually on their YouTube channel, subscribed to their YouTube channel. They have these growth calls that I've been watching. It's interesting to see like an exchange come together like that, like this decentralized consensus exchange. It's awesome. I like it. So yeah, like it's good to see that, you know, their volatility go up, and I'm sure they're increasing their USD volume right now according to their growth calls. That's like the goal is so you know, if you got a way to get some USD on BISC exchange, and you know, you want to help out, subscribe to their YouTube channel, maybe participate in the growth calls, and you know, can do this.
And I guess to call back to the start of the episode with the whole sidechains discussion, do not, even if you are new in this space, even if you are underinformed, don't just blindly follow oracles because of reputation. Be your own oracle. So on that note, like and subscribe if you want to, and go give JW some love on WCN. And Go.
Shinobi, are you saying that we shouldn't listen to Vinny because he's apparently the new Bitcoin oracle, as I'm told by CNBC?
No, you ignore. Do the exact opposite of everything that man says.
Definitely a big negative.
All right. I guess on that note, toots everybody. Vinny is a big counter indicator.
Later, everyone.
See you later this week.
Bye.